CNBC TV 18 Weekender.
Well, Mr. Saldanha, you've been at the helm of Glenmark since 16 years now, since 2000, and you just declared this whole vision about where you see Glenmark in the next decade. Tell us about, say we had to talk in 2026, where would Glenmark be?
Well, I think our goal, what we're trying to do in these next 10 years is to take this company beyond generics into specialty and innovative products. We've done innovation for the last 16 years. We've had success in terms of out-licensing our products, over $250 million of cash, what we got out of out-licensing our own intellectual property. So we've had quite a lot of success. Of course, the next 10 years, we've now moved to a completely different level of innovation with a lot of work going on in biologics, and we think that will drive our innovative dream over these 10 years. So our goal is in these 10 years to move up the value chain into being an innovative-led company. So if we start looking back from 2026, Glenmark will be an innovative-led company with a strong generics platform as part of the business.
So currently revenues are over $1 billion for you. Where would we be at 2026?
I think from a revenue perspective, our goal is to try and grow this business about 15 to 20% CAGR over the next 5 years, and even beyond that, we will continue to grow the core business at that pace. Obviously, if we have an innovative product that changes the trajectory completely. So we can't predict where we'll be in 2026, but we hope to grow the business pretty healthy in terms of revenues.
Okay. Well, one of the things was a guidance in terms of margins. You still expect that to be between 20 to 23% for the next couple of years. Why is it only 20 to 23%? When can we scale up?
Well, I think, we've taken up R&D spends to about 11%, and we're growing margins from 20 to about 23 over the next 3 years. We expect about 25%, thereafter. And I think, we've been conservative because of the pricing environment and the uncertainty related to drug prices, particularly in the US. We think margins will be under pressure in some of the markets, and hence we're being conservative, and we feel 23% is a rational number.
But you can probably scale it up. There would be maybe an upside potential.
There's always an upside depending on the product mix and the kind of products that we launch, and if we get some first to file opportunities or some unique products, you will see an upside from there.
Okay. So would debt also sustain at these maybe at levels of say between 2,500 to 3,000 simply because of the amount of investment that you have in R&D, plus you have your capex requirements?
I think our net debt will keep dropping, right? At least for the next 2 years, you will see debt coming down very significantly, starting this year and then next year, right? We think the debt numbers will keep on coming off. However, we don't intend being a debt-free company forever. So at some point, we would look, potentially at doing some bolt-on acquisitions and things of that nature. So we will have some debt on our books, but it's not going to be relevant anymore. That's the way we look at it if I take a next 3 to 5 year view.
Okay, so 3 to 5 years, debt won't be relevant, but your R&D portfolio definitely will be. You have around 13 molecules right now. Can you just give us a sense in terms of what is the out-licensing potential, especially for GBR 1302 as well as 830?
So I think, look, we've got a very exciting portfolio of products, particularly in oncology, that we've been able to develop. That coupled with 830, for atopic dermatitis, which is in phase 2, is exciting, right? The kind of work we're doing is really exciting. From an out-licensing perspective, our thinking is almost everything in our pipeline would get out-licensed. However, the deal structures could be a little different, where we want to keep a little bit more in terms of the development internally, as well as we want rights for certain markets that we will have either exclusive or semi-exclusive. So I think the deal structures will be different, but out-licensing is pretty much a given in terms of how we see things progressing from here on.
Okay, so can we expect a big out-licensing deal in FY18? I'm sure you get talks. I mean, you're in talks all the time.
We have multiple discussions ongoing. Our goal is to try and conclude something in FY18.
For 1 or 2?
I think, it's hard to predict, right? But at least we're trying to make sure we at least have one out-licensing deal in FY18.
For GBR 1302 or 830?
I really can't say which product right now.
You've done around 7 out-licensing deals in the past 12 years. Everything is always a long gestation period as well. Does it disappoint you sometimes that maybe R&D is such a long gestation period, you can't see exactly what's going to happen eventually?
Well, you're in it for the long haul, but clearly, the good news is despite us doing this for 16 years, we've got rewarded for our efforts, plus we've got all the learnings, we've got all the all the capabilities that we've built, right, using the cash flows that we got out of out licensing. So we've done pretty well to get here, right? Unlike many other companies who've actually had to spend on research and not see any deals or any revenue streams coming out of it. So I think it's been all in all, I continue to remain very excited because I think innovation is really the way to go for a pharmaceutical company. And we think these 10 years will take us to that trajectory.
Okay, 12 years, $200 million plus in licensing revenue. So what can we expect, say, in the next 5 years in terms of out-licensing revenue?
Well, I can't put a number in terms of out-licensing revenue. But I think the goal is to keep out-licensing and continue looking at partnerships to develop the pipeline from here on.
What about your inorganic plans? Do you have any?
So Glenmark, acquisitions is not part of our core strategy. So we don't see ourselves doing any major acquisitions. Every once in a while we may do a bolt-on acquisition, but nothing transformational, at least for the next 3 to 5 years.
And what about being acquired?
Well, clearly we have no plans to exit this business.
Okay, so would you probably hive off your R&D business at all from the generics?
We have absolutely no plans because our view is R&D is a core to what we're creating at Glenmark. And if you see our, what we're trying to do is we are operating across the verticals and across the value chain in derm, respiratory and oncology. So we believe there's a lot of synergies between the generics business and the innovative-led businesses. And that's why it's important to keep it within the same firm.
CNBC TV 18 Weekender.